Welcome. In this video, Xcn Coin is preparing to rise. We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. Upon examining the chart, one notable feature is the presence of a strong support level located just below the price, which has proven to be effective multiple times in the past. This support zone is significant not only from a technical analysis perspective, but also from an investor psychology standpoint. The fact that price has consistently bounced sharply upward from this level in the past shows that this area is strongly defended by buyers. Specifically, the fact that each time the price approaches this level, there has been a sharp rise, has turned this into a strong demand zone. In technical analysis, support levels are known to limit downward price movements and are often where buyers step in. These areas are watched closely by investors looking for opportunities to enter positions, and they are often where bottoms are formed. In this context, the fact that this support level has been tested multiple times and has turned the price upward each time shows that this zone is still active and reliable. If the price approaches this level again, many investors may view it as a new buying opportunity. Moreover, this support level holds significance beyond just a technical area. Since buy orders tend to concentrate in such regions, the supply-demand balance shifts when price nears these zones, with buyers taking control. Particularly large investors and institutional funds tend to increase their positions at these strong support levels because the risk-reward ratio is more attractive in these areas. The fact that price has previously reacted sharply from this support zone may also suggest that this area could be a breeding ground for double bottom or multiple bottom formations from a technical standpoint. This indicates that the foundation for a positive structure could be forming in the future. If the price comes back to this level, it is likely to react upwards again, in line with previous price movements. Therefore, this support zone stands out as a critical point for investors to watch, not only for short-term strategies, but also for medium and long-term plans. Additionally, the support level in question has passed multiple tests, consistently turning the price upward and earning the trust of investors. If price approaches this level once more, the psychological expectations and past experiences in the market make it highly likely that this area will act as a strong buying zone again. This increases the potential for price to bounce from the support and move to higher levels. However, of course, to truly understand the price movement, we need to consider other metrics as well. Keep watching. Upon carefully analyzing the chart, we can clearly see that the formation process of a very strong and technically significant pattern, the inverse head and shoulders, tobo, is almost complete. This pattern is extremely valuable as it tends to appear towards the end of downtrends, providing early signals to investors that a market reversal may be approaching. Especially during challenging and uncertain market periods, this pattern is often viewed by investors as a kind of roadmap. Looking closely at the tobo formation on the chart, we can observe that the left shoulder has formed, followed by the head, which made a deeper dip, giving the formation its characteristic shape. Now, price action is starting to form the right shoulder. The construction of the right shoulder typically marks a period where investor psychology begins to shift. Downward pressure decreases and buyers start to regain strength. This signals a potential market change. The consolidation in the right shoulder is also crucial for buyers to gather strength. Completing this process in a healthy manner will lay the groundwork for a stronger and more sustainable upward move once the breakout occurs. For the formation to be completed, the price needs to break through the resistance level known as the neckline of the tobo pattern. This breakout, when supported by volume, is generally considered one of the most reliable signals in technical analysis. After a volume-backed breakout, the price target is typically determined by projecting the distance between the low of the head and the neckline upwards. This target is often highly accurate and plays an important role in shaping investor expectations. In this context, the tobo pattern is not only a graphical structure, but also a representation of a psychological turning point. Furthermore, looking carefully at the area where the formation is taking place, we notice that as the price forms this structure, it has moved around specific levels that have previously acted as both support and resistance. This adds significant reliability and strength to the foundation of the tobo pattern. In technical analysis, it is always assumed that past price movements can produce similar reactions in the future. Therefore, the price behavior in this region supports the validity of the formation. Especially if a volume-backed breakout occurs, the technical target for the tobo pattern, the upward price level, is very likely to be tested. As this movement begins, investor confidence may increase, and with the potential for FOMO, fear of missing out, buying pressure could intensify. This would likely help accelerate the price's upward momentum. If the price gathers strength from the right shoulder and breaks upward, it will create a scenario that offers hope to investors both in the short and medium term. If this technical structure is completed according to the rules, it could mark the beginning of a significant upward move with substantial potential. Therefore, it is crucial to carefully monitor the current formation and price behavior. If the Tobo is successfully completed, a much more positive market sentiment could prevail, and the price could easily move toward the target. In Elliott wave theory, the completion of the first wave typically marks the period when the market has made a strong start, and investors are highly motivated to buy. This phase often signifies the beginning of a strong uptrend driven by positive news, leading to increased investor optimism for the future. The first wave is considered a movement in which the price makes a significant upward move, signaling the start of a bull market. However, after every upward move, a correction typically occurs, which is necessary for the market to progress in a healthy manner. The important aspect here is that the price undergoes a correction, returning to a more balanced level. This is called the second wave, and it is usually caused by investors taking profits, leading to a price decline. In Elliott wave theory, the second wave is the corrective wave that follows the first, typically marked by a significant pullback in price. This pullback creates a period of market relief. Investors begin selling off the profits they made from the first wave, which causes the price to drop. However, this correction is generally a healthy adjustment that doesn't deviate from the long-term upward trend. The continuation of the market's rise depends on the completion of the second wave, as it prepares the ground for the potential third wave. The third wave, in Elliott wave theory, is considered the strongest and longest wave. This wave usually represents a major upward movement and the formation of a strong trend. The third wave is often the most widely followed wave, attracting the majority of investors. Therefore, the completion of the second wave is crucial because it sets the stage for the third wave. The second wave generally causes potential buyers to wait as they anticipate the start of the third wave and aim for substantial gains. According to Elliott wave theory, when the second wave will be completed, how deep the price pullback will be and at which levels this correction will end provide important insights. Typically, the second wave ends around the Fibonacci 0,618 or 0,786 levels. However, there is a critical support area here, and the price may not fall below it. These levels often trigger the involvement of major buyers, which causes the price to resume its upward movement. These levels are key support areas that help push the price back into buying mode. The second wave typically offers an ideal opportunity for the major players in the market, such as long-term investors, to re-enter. Therefore, after the second wave, it is expected that the price will rise and a new buying phase will begin. Furthermore, after the completion of the second wave, the third wave is expected to start strongly. This marks a period of acceleration in the market's rise, where significant gains can be made. This period is very important for investors because the third wave usually provides the highest returns. However, the second wave must be completed in a healthy manner before the third wave can begin. In Elliott wave theory, although the second wave is generally considered a correction, this correction typically occurs very close to the previous peak levels. This creates a solid foundation for the market to rise again after the pullback. Additionally, when the second wave is completed, there is usually a significant increase in market confidence, and a positive sentiment returns among investors. This leads to more buying and prepares the market for the third wave. The second and third waves form the foundational elements of the Elliott wave theory and signal the beginning of a strong market rally. Yes, friends, this is how it happened in this video. Don't forget to subscribe and like. See you soon.